Good morning, everyone. This is Joseph Trevisani for FXStreet and Worldwide Markets. Welcome to another edition of Market Directions Interviews. This morning, or this afternoon or this evening, depending on where you are around the world, we're very lucky to have Dion Rabouin from Reuters. One of the most interesting things I think that I'm pretty good this morning. One of the things that we don't pay attention to a lot in the market, which is very important, is that we work sort of in symbiosis with the news people. First thing we do in the morning when we come in, when I was trading, I used to come in and sit down and look at the charts. The second thing I would do would be go through the news flow. It's important and interesting for us to understand how the news is both decided upon, amassed, and written. So I think it would be interesting, Dion, if you could go through with us how you would sit down in the morning, decide on a story, decide on how to cover it, and what angles to take, because that is the information that we as traders all use, and the market in general all use to decide on what's important during that day.
Yeah, it's a lot of times it's not so much making a conscious decision of I'm going to report on this or report on that. That's one of the great things about my job is we're very reactive a lot of times. And so it's, when the news hits, you've got to cover it. And so my specialty over on the Reuters team is I cover treasuries, forex, and then emerging markets as well. And so if there's big news in any of those particular fields, if something big happens where the bond market blows up or sells off, or we've got a huge move in the dollar, yen, any of the big dollar crosses, then I've got to be on it. We've got an entire team, and so depending on who is that day responsible for what particular market, we're always watching, we're always making sure that someone is watching every move so that if there is a big change in whether it's dollar euro, dollar yen, yen euro, et cetera, or the 10-year, 2-year, there's someone who can immediately find out what's happening with that. How we decide on what we want to report on is that's our bigger sort of entrepreneurial or kind of interest-driven stories are we'll get a tip. I talk to smart folks like yourself or other traders, investors, analysts out there, and maybe through a conversation or just maybe I'll notice something in the charts like the movement of the 10-year over the past couple weeks, the past month, or something that comes along in a note, and then just investigate, start making calls on it, start checking other data and just seeing what people in the market are thinking and what they're doing. And so that's generally how these stories come about is it's either, something big happens in the market and we've got to react, and then from that other stories will flow, or just kind of listening to the calls, and maybe I'll make a call with you on a Wednesday and I'll say, hey, Joe, what's going on with the dollar? And you'll mention something that maybe isn't big for that day's story, but, is something I can think about and sort of, really chew on and down the road write a bigger story about.
Interesting. For the market reactive stories, which I'm assuming are the majority of the stories that you cover, is there a structure that you try to adhere to, or are there particular items that you always try to incorporate into one particular story to provide as much information to the market as possible?
Yeah, it's less what I try to do personally. I mean, I have little things that I try to do, but Reuters has a very particular style. If you'll notice, a lot of our forex stories or our bond stories, our market reports in general they're always around the same length. So usually with our forex stories, they'll be around 400 words, at least the ones coming out of New York that we write. We try to keep them between 300 and 400 just because, it's a general report. We're kind of just saying, hey, here's what's happening. It's not a big breakout. And there's been a big emphasis here at Reuters over the past few years to, either do a great big story or a smaller story, something that just we can get out there really quick and get the information to the people so that they can digest it and, move on to the day. As you were saying, it's one of the first things you check. So if I'm writing 500 or 600 words, you don't really have time. The idea is that you can come in, get the information, digest it, get a quote in there from, someone else who's in the market, and go about your day. And so that's the structure that Reuters really has been making a point to emphasize and have all of us make as part of our daily routine to make sure that our stories are fitting within that framework.
Interesting. I mean, one of the more interesting stories I think of the past couple of years, and one of the ones that I would imagine would have been very difficult to cover, was that morning when the Swiss dropped their peg on the Swiss franc. I, as a trader, Have never seen a move like that in all my years of trading, which at this point are stretching on towards several decades. Was it any, how is it, we want to talk about that. That's not an issue for here. As it is for other times. How did Reuters handle that story? And what was it like sitting on a desk and trying to get a story like that together when the speed with which it took place, especially the market move, was absolutely phenomenal, like nothing I'd ever seen?
Yeah, I wish you'd cleared this question with me first, Joe, because I actually wasn't at Reuters when this particular story happened. I think at that point I was working somewhere else. I may have actually been. I think I was actually in Brazil at that point when it happened, working on stories related to something completely different. But I can tell you stories like that. When something happens, our first question that we always get put on is why. Why did this happen? We snap out people who who have our Reuters icon terminal. They'll see the alerts. That's our first thing, is just alert that it's happening, stay on point. And then from there, we've got a team full of people who are calling around, asking traders, asking analysts, asking fund managers, hey, why did this happen? What is going on? And once we can find someone who has an idea, maybe they've heard something, maybe they've gotten a call, an email from someone out there, or maybe they have intimate knowledge of the situation, they can tell us, and then we can kind of corroborate and confirm that and go from there. I'll tell you that in my job in covering the markets, one of the most difficult things to deal with is a flash crash, or so-called fat finger, where there's a trade that yen will move by 50, 100 basis points really quickly, and there's really no explanation. And we're calling around, everyone's like, yeah, I don't know. And eventually we settle on, okay, someone says, oh, it's a flash crash, and or it's just a fat finger, something like that. But those are always the most difficult and frustrating, because you never want to accept that that's the answer.
Right. No, understood. I've written up a number of those on my own in some of the columns that I write. And it's difficult because what you're looking for, as you say, is you're looking for some sort of explanation, some sort of rationale for what happened. But on more than one occasion, I came to the conclusion when I was writing my own stuff that what was going on here was simply a typical market move. What you had was an amassing of stop losses or something, and it appears to be inexplicable, but within the terms of the market, it is not. Are those kinds of events harder to convey for you, as you said, as a reporter trying to put a story onto an event, than when you can tie it to, non-farm payrolls that come at you having a very deliberate cause and effect from one to the other?
Yeah, absolutely. Those have been the stories for me, being newer to covering the space. I've got colleagues who have been here doing this for 20 years, 15 years, 25 years. And so it's a bit more routine. I know when I first started in the space, that was one of the most difficult things to do, was just kind of these, as you say, moves. And at Reuters, we always want to know the why, because that's what we're adding. People who have our terminal or who have other terminals whose names we won't mention here,
I'm not going to say that.
going to say their name. If you have other terminals, you can see the move for yourself. You can see, hey, there was a drop in the dollar, Dixie went down, or dollar euro went down, whatever. What you can't figure out just from looking at the numbers is why. And so that's really the thing that we provide. So the thing we always want to come up with is answers. Our motto here is we're the answer company, right? I'm some Reuters. And so, some typical market move or a fat finger or whatever it is, that's always the last thing we want to come to. So if someone says that to me, hey, I think it was just flash finger, my first responsibility to that is to thank the person and call someone else.
Right.
Because even if that is the answer, it's not something you want to put out there, because if you say that and then really it was some geopolitical event that you just missed, or some big buy, then you're not doing your job, or we're not doing our jobs providing answers for why these things happened.
Yeah, it's a bit like the old Sherlock Holmes line that after you have eliminated everything that you can, the remaining reason, no matter how impossible, has to be the answer. And that's kind of where you end up with these things. To move on to the more in-depth stories that you do, I know you did one recently about the effect of Dodd-Frank and the changes in the retail FX market over the past 10 years or so here in the United States. Do you approach those differently, and do you use those stories as a way of getting out different types of information to the market, which is of important to the market, but it's not the day-to-day market moves that you usually write about. I thought that was a great
Yeah,
story, by the way.
well, thank you, Joe. Those stories are important because those are the stories where we can really, dig into something, really kind of talk with a lot of people, get different perspectives, and add something to the narrative that's not just the general day-to-day boom, boom, boom. Here's what's happening. And I think again, it's all about providing value and people who want to keep coming back to Reuters, whether that's on Reuters.com, whether that's through our terminal, where we try to provide news as fast and as wide-ranging as possible. And I think those stories are really important just because, if you're just getting the general day-to-day moves, anyone can do that. But what's a big part of Reuters is developing sources and finding those bigger stories that traders can really, sink their teeth into and get a bit more from. So those are a lot more rewarding in a lot of ways, not the least of which because you put a lot of time in it and you can really reveal these bigger market themes or motifs.
Markets have a very pronounced tendency to have a very narrow focus, both on what they're talking about and in time. So those stories are ones which can help traders, and myself amongst others, move beyond that and see that there are actual patterns out there and political events. Moving on, of course, to political events is where we're going to with this. That's the regulatory side of it. But the markets themselves have taken some very extreme positions lately on things that are certainly not secure and guaranteed to happen. Equities have been extremely impressed with the potential of the current administration in Washington. There's very little that's been delivered. Do you think, just as having covered all of this stuff in the markets, that it matters to the market whether or not there's an actual delivery on some of these items, tax reform, healthcare, and something which no one is talking about much anymore, stimulus? So far, we've only seen promise, and the markets are banking on that. Where do we go from here?
Yeah. I mean, I think delivery is very important. I just think it's a matter of how the market has taken it. So different markets have reacted in different ways. I mean, as you pointed out, the equity market has taken off on the expectation of stimulus, tax reform, things like that. Whereas if you look at the bond market, it sold the so-called Trump trade very early on. And so I think both markets will respond to actual delivery of these things or non-delivery of these things. So if the tax reform proposal is insufficient for what the market's looking for, I think you will see a very pronounced response from the equity market. I think you'll see a less pronounced response from the bond market because, as I said, it seems like they've already kind of sold on this. Results are important. It's just that the markets try to be forward-looking, and so as much as you can try to get out ahead and consume all available information, then you have to make a decision. And so the equity market has decided that it believes the Trump trade, that these things are coming, that tax reform, stimulus, perhaps even the healthcare overhaul is actually going to happen, whereas the bond market seems much less certain. And you see that with where we sit in each of those markets. Over 6,000 in NASDAQ, Dow and S&P both sort of approaching, again, new all-time highs. And if we don't see the delivery, if we see that President Trump and the Republicans in Congress can't deliver on these things, we're going to see a sell-off. And so, yeah, I think definitely results absolutely matter.
It's interesting. You could almost see a reversal happening in the two markets. Whereas if you do not get, or even if you do get, let's say you don't get performance from the political side, that would certainly dim equities prospects. But what it would do would be to foster the bond market, and you get rates lower yet. So you'd get, at that point, you would get the markets moving in their traditional dichotomy, which is one goes up and one goes down. They don't both move at the same time. What kind of time frame do you think we have on this? Because right now, we've already had one failure at healthcare. The failure within the Republican Party is going to be, you're going to have the same type of conflict when it comes to their other issues. When you go to move tax reform, you're going to have the same issues between the moderates in the Republican Party and the conservatives. So it would seem that the same type of delay and problematic passage is going to occur as soon as they start to get real with actual bills and legislation for tax reform. When you see that, is the market going to react to that as it would as if nothing is going to happen?
I think if we see significant delays, we're going to see a market reaction. Absolutely. I mean, I think what we've seen from the equity market in particular is that, you know, when these things don't come through, they're quick to sell, and then when there's rumor that something new will happen, you know, when we saw the healthcare bill pass, we actually saw a rally kind of towards the end of that week because people thought, oh well, hey, now he's going to turn towards tax reform, and that was what the market really wanted anyway, was the tax reform and the stimulus. And so what we may see is a sell-off if tax reform doesn't work, and then maybe that immediate takeoff again on, oh, well, maybe now he's going to move to stimulus. One of the things I think is interesting is just the role the Democrats might play in terms of this this possible tax overhaul, I guess I'll call it, that President Trump wants to implement, because I see it likely passing the House of Representatives because the Republicans are so overrepresented there. Where I think it might run into some trouble is in the Senate, where the Republicans don't have the same sizable majority and may need to overcome a filibuster from the Democrats, something like that. And so, again, even if we do see this failure, you might see a couple days after the market being, hey, you know, he could do fiscal stimulus. And so the equity market seems to be grabbing hold of any good news it can, and you know, going on a bit of a buying spree. But it does sell off once these things don't happen, and then it seems to say, hey, well, whatever the next item or agenda item is, maybe that's going to come through, and it's time to buy now so we can get ahead of that.
Right. I mean, historically, certainly the equities are the more enthusiastic branch of the financial markets here in the city, far more than the credit markets. You know, this morning the past 2 days, we've seen this dispute flare up about Canada over softwoods, and the Trump administration wants to put a tariff on softwoods. I mean, this is a conflict, a dispute, which reoccurs periodically with Canada, because what we do is we sign a multi-year agreement, say expire, then we have this another dispute again, they get solved again. Do you think there's something different in this administration? Because the administration made a great deal of campaign promises and campaign rhetoric about making trade fair, not free, but fair trade. Do you think this is part of that particular dispute? And we'll move to China in a second. Or is this just something that comes up periodically with Canada, with whom we have, as everyone knows, the longest undefended border in the world? It's not really an issue as far as acrimonious problems with our northern neighbors, Canada.
Yeah, I think it's a bit of both. I mean, again, I'd speak with people more intelligent than myself, some of our political reporters here who talk to their sources and sort of reading what they're putting out. This isn't the thing that I particularly have an opinion on because, you know, you talk about trade policy, tariffs, that's a bit above my pay grade. My job is to sort of take in the analysis and the information and put it out there for the world. So one thing I think is interesting about this dispute with Canada is we saw the loonie, the Canadian dollar, sell off yesterday as a result of this, and you know, maybe the market kind of thinking that, okay, well, initially President Trump was focused on China and Mexico. Now he said he's not going to label China a currency manipulator. There hasn't been a lot of talk about renegotiating NAFTA in terms of penalizing Mexico. The administration really hasn't focused much attention on Mexico overall since he's been in office. And actually, the Mexican peso has been one of the strongest currencies since Inauguration Day, if not the strongest. It was the strongest for the first few weeks. I actually put a story out about that. But it's been one of the strongest since Inauguration Day, in large part because there's been a lot less rhetoric from the Trump administration. And so, you know, maybe people are thinking he might reset his sights on Canada because that's, again, an issue where the U.S. or a country where the U.S. does have a trade deficit. And a lot of the wealthy business owners who are in President Trump's ear, who are well represented on his cabinet, don't have a lot of business dealings that would be negatively impacted by strained relations with Canada the way, or with tariffs with Canada, the way that perhaps they would be by tariffs with Mexico, or a trade war with Mexico, trade war with China. And so that's potential. see that certainly play out in the currency market yesterday, but I don't know how much there really is to get into a tiff with Canada about.
The response of the markets for the Canada tiff, which I don't think it's much more than that, truthfully, was pretty much limited to the currency markets. I mean, it didn't really have any effect in equities, and I don't think the bonds even noticed that it was going on. Those two markets are telling you that this is not an issue that's going to have any legs to it. The China issue is one that we would have thought during the campaign had a lot of legs. But what seems to have happened is that the Trump administration is willing to make very specific reality, if you will, the trade necessary of trade issues with China for help on North Korea. Now, what has happened in the past, of course, is this is exactly what's happened, but it didn't happen in this way. Normally what would happen is we have a dispute with China, and then something flares up with North Korea. This time, the administration is putting the trade out there, the negotiation tactic right out there. We are talking with China, and we are talking about North Korea, and we're considering making trade agreements if we get help. Do you think this is a new kind of a new view for the markets, and a calmer view in that markets are not going to see this escalating rhetoric? In fact, it's been much calmer since Mr. Trump got elected than during the campaign.
Yeah, I mean, I think taking on North Korea instead of China is certainly a much less dangerous or much less formidable foe. You know, their navy, their missile capability, despite what their leader Kim Jong-un might suggest, is not particularly, again, I'll use the word formidable, is not as formidable as perhaps he thinks it is. And so escalating tensions with North Korea don't cause nearly the amount of turbulence that escalating tensions with China might cause, for example, because, again, that would be the world's largest and second largest economies at loggerheads, and that's going to scare a lot of people. It's interesting that he threw it out there in terms of, well, we're going to negotiate these more favorable terms with China in exchange for help with North Korea, because North Korea is much more of a threat to China than it is to the U.S. I mean, Kim Jong-un has been doing these missile tests and things like that, and they claim they've got a nuclear weapon. There's been nothing to suggest even remotely that they have a nuclear weapon that could reach anywhere near the United States, even Hawaii. And so it would seem that you'd want to do the other way, that China would want our help in negotiating with North Korea, even though they are much closer allies than we are. But it does seem odd, and it's something that certainly caught my attention. And it did, push down those tensions so that the market was more able to rally and react on better news. Because, again, if you're picking a fight with a petulant child versus picking a fight with another large grown man like yourself, there's much less possibility of a street brawl. Excuse me.
That's a very good analogy. One of us is going to have to use that very soon in something that we write. I like that one. It's very good.
Thank you.
It is definitely true that the markets, North Korea's threat is the threat of Armageddon, basically. It has no other threat. It has no economic clout. It has almost no political clout, except making noises about launching missiles someplace. Whereas, remember, over the past 2 years, some of the greatest turmoil in the markets, in the U.S. and global equity markets, were caused by unexpected devaluations in the Chinese yuan. That hasn't happened. So the Chinese yuan has been pretty much calm for about 4 or 5 months now. It seems that that is also a beneficiary of this different way of looking at the trade relationships between the United States and China. The Chinese have once again started to pump up their economy. It looks like they're providing more liquidity for the economy to keep their machines humming. There's a definite recognition, I think, on the part of China this time around that trade is essential and a good relationship is essential. In fact, it would seem to me that China's rulers and the American administration have infinitely more in common than they have any sort of pending dispute. A recognition of that could go a long way to taking that problem away from the markets and their reactions. But we have, of course, another one coming up. There's never a shortage of good stuff in the world. France and the EU and the recent election. Markets seem to have gone wholly on the notion that Macron will win, that any issues with France and the EU have disappeared. This is similar to the reactions that the market had before Brexit and the American presidential election. Granted, things are not exactly the same because the polling in those two cases was much closer going into the election than anything is expected to be here. Do you think the markets are perhaps being a little too sanguine about this particular election?
Yes and no. I mean, I think there is certainly a write-off of Marine Le Pen's chances that makes sense in a way. I mean, if you look at the polls, she's polling, I think, at best about 35, maybe 40% is the best she's doing. And I think that was about the worst President Trump was doing, was behind, 10, 20 points in terms of when we were polling ahead of the U.S. general election. So that makes sense in this, especially after the result of the first round of elections when they were so close to what the polls predicted. I think maybe the market's saying, okay, well, maybe they finally got it right. Maybe they know what they're doing this time. I do think there's an underappreciation of other risks. The first, which being Macron is sort of a bit of a political unknown. He's never held office. We don't know what he's going to do, who he's going to surround himself with. He hasn't said he wants to pull out of the euro and, of the agreements a la Brexit or anything, but we don't necessarily know what he's going to do. There's also potentially an Italian election coming up that could shake things up. The Italians are not particularly happy with the Eurozone, the European Union right now. And so it does seem like everyone was just kind of bracing for this absolute worst case scenario, and then it didn't come, and now, skies are blue, grass is green, everything is beautiful. And that may be a bit too sanguine in terms of the reaction. Again, particularly in equities, I think, as I've said, one of the most important markets to watch right now is the bond market, particularly U.S. Treasuries. I mean, one thing that I wanted to bring up earlier that I'll take a chance to bring up now is just the 10-year Treasury is about the same level it was in November. We've had 2 rate hikes since then in terms of overnight interest rates, and we're still right about the same level. So that just shows that the bond market is really selling this Trump trade. They're selling a lot of Euro trade. The bond market is kind of, Michaela Maroney at the Olympics, 2012 Olympics, like, I'm not impressed.
Right.
And so that's been really interesting to see because, again, we talk about markets. Generally, we're talking about the equity markets, but the bond market is telling us that things are not exactly great right now, and that's what I've been watching a lot, especially.
I agree with that. It's that old line from President Clinton: when I come back, I want to come back as the bond market, so that I'll be able to control things. One thing that struck me about the French election is the potential, if not, and I'm not really buying that Marine Le Pen is going to win this. It just doesn't quite seem in the cards. But is that her showing, or the showing of that party, which has a lot in common with the sort of protest vote against the establishment. Macron is very much a man of the French establishment. He went to the French Civil Service Academy. He was an economics minister and official underneath Bernard Arnault. So he's very much a man of the establishment. And there is a huge anti-protest vote fomenting in France. It is possible, certainly, that if you get an election where the vote is 40% or at some level, then the markets have to realize that this is going to be a huge shock for the EU, especially if, as you say, the Italian election is coming up. One thing about and we don't know because it's not been called. One thing that's true about the Italian election is the opponents to EU don't have the baggage that the National Front has in France. So their potential for really gathering in that protest vote is probably much stronger. I think we're in for a very interesting year in the markets and in currencies local to this. What do you think are the potential in Italy for this type of very dramatic protest vote?
I think there's certainly potential there. I mean, that could be one that really, if an election is called, I think we could see again another sell-off in equities, bonds, really perking up, because then it's like, oh, okay, this is actually happening. And then we've got to start taking polls. We've sort of, and I mean, people have been doing a bit of this, but as there hasn't been an election called yet, it's hard to really dive into it. And so I think that could be another thing where the market's like, oh my God, all right, we got to panic. It's time to sell, move out. So that's it. The potential is absolutely there, and as you said, the baggage that Front National and National Front carries is not with some of the Italian parties who are anti-EU and anti-establishment. Um, I think a good showing by Marine Le Pen is not as important, provided she doesn't win, just because, I mean, we've seen this anti-EU, anti-establishment sentiment fomenting, and I think the thinking is, as long as it's not triumphant in terms of electing a leader or putting a majority into Congress or parliamentary positions, then it's not so bad.
There's an interesting point of view out there that one of the things that the EU needs to do, or needs to have happen, and one of the things that I thought might have happened after Brexit, the EU's purpose is, in historical sense, a political purpose. It's to prevent another first half of the 20th century. But we're no longer living in the 20th century. We're in the 21st century, your century, essentially. And the EU is not delivering to its constituents, meaning the people who live under the EU, not in any sense that there is a uniform affection for what was very well received when it started. Is there, I had hoped, or at least thought perhaps, that the EU would take a different view of its controls and what it's attempting to accomplish economically within France. Do you think Macron will move, because he has said that one of the things that he would like to do is to move France into a stronger EU association? Is that the right direction to go, considering the potential for the vote here? Because the EU seems to be determined to ignore the unpleasant facts of people underneath it in many of the countries beneath it. And this seems to me to be a dangerous way of looking at the future.
Yeah, well, one of the things that is particularly, and one of the reasons why this election is so important, it has such wide, ranging potential, what's the word I'm looking for? I guess potentialities, we'll say, because I can't think of the actual word I want to say, is because of the period of time we're in. We're going to see a new ECB president within the next couple of years. We'll see a few more going on within the EU. So right now is a very precarious time, and leadership in some of these places, particularly France, Germany, which has elections coming up as well, are going to determine a lot of the direction that we move in terms of the political bloc of the EU. And that's why people are so concerned about these developments with these elections. And so I think Macron will have the opportunity to push in that direction, but I also think we'll see him tested as a statesman, because again, it's one of the things that you talked about, is just that statesmanship and how well he can move to convince the disaffected, because they still again look like a minority, the disaffected minority who thinks that EU membership is not beneficial and is not helping France as much as France is helping the EU. He'll have the opportunity, if he's elected, to move them in that direction. That'll be his task. The same way Britain's leadership right now is sort of having the opposite task in terms of taking the disaffected minority there who wanted to remain within the EU and say, hey, we'll be all right. Here's how we're going to exist going forward. And that's going to be very important for Macron or Le Pen or whoever wins. I guess it's going to be one of them, obviously, in France, but for whoever wins in Germany, for the new leadership in the Netherlands, in terms of navigating this. How does the European Union look in the 21st century? And it's going to be on this new crop of leaders to define that and to really make that attractive to the people they govern and the people who put them in office. Because as you said, we haven't exactly defined what EU membership means in the 21st century, and what that is going to be really defined by this new crop of leaders.